The U.S. Federal Reserve was in focus in the gold space this week as investors waited for comments from the central bank's latest meeting. Held from November 2nd to 3rd, the Fed was widely anticipated to announce plans to ease its bond buying program. That is in fact what happened. The Fed is currently buying $120 billion worth of bonds on a monthly basis, but it said that in the coming weeks it will start cutting that amount by $15 billion a month. If it keeps up that pace, bond buying would end in June 2022. However, the Fed said it may speed up or slow down as it sees fit. Speaking directly after the news, Gareth Soloway of InTheMoneyStocks.com told me that this flexibility from the Fed is something the market loves because it indicates that it can still receive support if needed. He also shared his thoughts on the path forward, noting that once tapering is done, the Fed can start to increase interest rates. Going over gold's reaction to the Fed's news, Gareth said it was down quite sharply before the statement, but then lifted higher once the central bank actually spoke. He remains very bullish on gold over the long term and said that's partially because the yellow metal is starting to wake up to inflation. Here's how he explained it.
The reason why you know that is because in general, we've seen interest rates go back. We were down at 1.2 to 1.3% a few months ago, and we're now near 1.6%. If you look at the performance of interest rates versus gold over the last 20 years, as interest rates go up, gold sells off. Well, we haven't seen gold sell off. We've seen gold more chop sideways over the last couple months as interest rates have gone up. And what that again tells us is that the market is starting to realize that inflation is here and big money is buying every single dip on gold.
With the Fed in mind, we asked our Twitter followers this week if they think the central bank will be able to finish tapering by next June. The poll was ongoing at the time of this recording, but the vast majority of respondents said no. We'll be asking another question on Twitter next week, so make sure to follow us and share your thoughts. Although gold has been in the spotlight, I also want to do a quick check-in with uranium, which continues to attract interest. I had the chance this week to speak with Ciampaglia of Sprott Asset Management, who shared his thoughts on the market, as well as the role of the Sprott Physical Uranium Trust. One of my key takeaways was about utilities companies. It's notoriously difficult to get a handle on what these entities are doing, and right now discussions are centered on when they may start contracting. That still remains to be seen, but John explained that they're definitely paying attention. At the moment, utilities are trying to understand the Sprott Trust and how it's changed the uranium market, as well as how the landscape has been impacted given the recent increase in prices. The interview covers quite a bit of ground, and if you're interested in uranium, you should definitely check it out when we publish it in full next week. That's all for this week. If you like this video, make sure you subscribe to our channel and turn on notifications so you don't miss future updates and interviews. You can also follow us on social media or click below for our free report or any article mentioned in this video. We'll see you next time.